So let's see. We're going to go over the trades from today, and this was kind of an interesting day because the gap scanner this morning, and you guys can go back and watch the pre-market watch list if you want. It really wasn't that great. The couple that we were watching, we had CLWT on watch. The pre-market high was 360. I don't know, it was like 365. But the problem is this is a 5-cent tick stock, so it trades in 5-cent increments. And so this is different from a stock that simply has a big spread. It will only trade in 5-cent increments, 315 by 320, 325 by 330, etc. And so what this effectively has done, if you think about from $3 to $4 on a typical stock, how many places can you put an order? There's 100 places, right? Because you could put them at every single penny, and there's 100 pennies in a dollar. So you've got orders spread across this large kind of this range. And it's not uncommon to see these stocks that trade in 1-cent increments move very quickly. So what the 5-cent tick pilot program has done is it's removed 80% of those different price points and brought them just down to the 20 price points between $1 and the next dollar. So from 3, you've got 305, 310, 315, 320, 325, 330, right? So what happens is all of the orders that would typically be spread over the 100 different price points are now lumped in these little kind of like it's almost like think of ruts on a dirt road. Everything is getting lumped into the ruts. And what that does is it ends up that there are lots of buyers and sellers at each one of those kind of ruts, at each one of those tiers, and the stocks just don't seem to move as quickly because it takes a lot more buying to overcome the number of sellers that are grouped in each one of those little ruts or trenches or whatever you want to call it. So as a result, I don't usually trade them because if I want to get in this right here at 320, I could buy at 320 and yeah, sure, I'm down 15 cents on the bid, whatever. That's not the biggest deal, but the reality is it's going to take a lot of buying for it to even just move up one tier. And so one tier would be to move up to 25. And then for it to move up to 30 is going to take even more buying. And so it's almost like they trade in a very different way. They trade very slowly. They trade more like a stock like Siri, which has a 1-cent spread. Siri has a 1-cent spread, but there are so many buyers and sellers on both sides that it moves very slowly. And that was kind of the idea of the pilot program. It was to reduce volatility and to make it easier for investors to buy large stakes in these types of companies. Right now, if you pull up a stock like KBSF, even though this has 100 possible places you could put an order between each dollar, because it's a traditional 1-cent spread, what you find is that the orders become very thin. You might have a couple of orders at 67, and then 62, and then 60, and then 55. And on the other side, you might have an order at 89, one at 94, 96, and 601. And so if you have someone that comes in and buys 10,000 shares, this could very quickly go straight up to 610. And that just does not seem to happen with the 5-cent tick stocks. They just seem to get stuck in these little trenches, in these little grooves. And so generally, we don't really want to trade them because they haven't been good for day trades. The same as we wouldn't trade Siri or Bank of America. We don't day trade these ones for the same reason. They move typically pretty slowly. Now, Bank of America is a little bit more expensive now, so it has a bit more range. But Siri is definitely a slow one. Sprint. This is another one that moves really very slowly. It's so thickly traded. As day traders, we look for volatility. And we just haven't seemed to find it in stocks that are participating in the 5-cent tick pilot program. Now, that is certainly part of the goal of the 5-cent tick pilot program. It was to reduce volatility, but it was actually primarily the reason it was created wasn't actually to reduce volatility. That was sort of one of the other possible. Well, they were wondering if it would help reduce volatility and make those stocks easier to trade. But the real reason that it came around was because of concern that there were fewer IPOs of small caps in the last 10 years since the 1 cent since decimalization occurred, right? Because before decimalization, all stocks traded in fractions, and so there in Congress and blah blah blah, there was concern that since decimalization occurred, there had been fewer IPOs of small cap stocks, and that means companies that potentially could come into the market aren't getting that opportunity. And they wanted to encourage institutional investors to be able to make money on small cap stocks to the point where they would want to encourage more IPOs. And they thought maybe this 5 cent tick pilot program would help that. That would be good for American businesses and things like that. And I think that the results so far, from the few things I've read, is that this has not increased institutional trading in these stocks. Yes, the institutional market makers do make more money with a 5 cent spread, but it hasn't been enough to make any impact where we're seeing more IPOs or anything like that. So ultimately, the 5 cent tick pilot program, based on what we've seen and what I've read, is probably not going to get approved for actual implementation across the whole market. Who knows? I mean, maybe it will, but it doesn't look like it will. So anyways, right now, when I see a stock that's 5 cent tick pilot program like CLWT, I pretty much just don't trade it. I know that it's going to be more difficult to trade. However, this was one that did make a decent move here from $3 up to a high of $3.95, and I was impressed. It pulled back here a little bit, it broke down, and then it curled and broke over $4. And to me, I felt like this was going to be a false breakout and it was going to probably roll over. So I said that I kind of was watching it short below $4. Stop would have been high of day. And that actually would have been a really great trade. And I didn't take it, which was kind of silly. I should have taken a stab at it. But as I was looking at it, I just wasn't sure. I wasn't sure it was going to work out very well. So anyways, I didn't take any long trades on that, and I didn't take anything short on it, but there was that one opportunity there. Okay, so the one that I traded this morning was UAVS, which was kind of interesting because this is not a stock that we were familiar with. However, it was on the gap scanner this morning, gapping up with a pre-market high of 750, as you can see right here. So I said, okay, guys, this is interesting because you can see here that it's a reverse split. You can see that right on the E-signal chart. This is a reverse split, and we know that stocks that have just had reverse splits sometimes make really big moves. We've seen it on KBSF. We saw it a few weeks ago on, I think, INNT and TENX and a few others. It's kind of a setup in a way. The recent reverse split and then the squeeze. A lot of times recent reverse splits will also have some news out that sort of get traders excited. And so I was watching this pretty closely over 750. However, when the bell rang, it opened a little on the low side. It opened actually at 696. And I thought, well, I'm not really sure this is going to do a lot. I'm interested, but I can't really tell. So let's see. Let me show you my account here. So this is my Lightspeed account, $4,091. $4,941. And then I've got my IRA account right here, $1,437. All right, so combined $6,378 on the day, which is pretty good. So on this trade, I thought UAVS, being the reverse split, a recent reverse split, had some good potential, and so I decided that I would take it in my IRA. I was a little cautious, but I thought, you know what, I think this thing will probably work. So I jumped in this in my main account with an order at 753 right here. Now, in fact, I only filled 1,714 shares. So I didn't get my entire order filled. I only got a partial fill. And that's the same thing that happened in my main account. I put out an order to buy 2,500 shares at 741, well, I think the order was 750 and executed at 741, but I only filled 1,000 shares. I then doubled at 797, 50 cents higher, which is risky, but at that point I could tell that the stock was moving quickly. I then added more at $8.50, and I sold at $9, and then I ended up adding more at $8.85. So I was adding on this pretty aggressively as high as 885 and selling into the squeeze at 935. So let's look at this. So right out of the gates, it breaks the pre-market high, which is kind of what I was watching it, and I started to see volume coming in at like 25 and I don't know, 718, 719, 720, 725. And so I was like, okay, I'm seeing buying coming in. I think it's probably going to break the pre-market high, so I'm going to jump in now. It breaks the pre-market high, and then boom, that's where it just really start to take off. So it squeezes up here to a high of 977. Again, this is one of those stocks that just squeezed almost 3 points right out of the gates. The challenge is, where do you find a good entry? Fortunately, this had a decent pre-market chart where we were able to establish entry at the break of pre-market highs. So 750 was the entry point, the first entry, and then adding as it squeezed up. So let's see. So we'll go back here. So on my IRA, it's saying that let's see. So I sold right here at, I guess I sold 400 shares at 761 or 771, 760. I don't even remember pressing the button. I don't know. I pressed it by accident, or I'm not sure what happened, but I ended up selling the whole position at 835 and 825. So definitely a little bit more conservative in that account, taking profit a little bit faster. So with 1,700 shares, the win was $1,400, which is, I don't know, what is that, like 70 cents per share or something like that. A pretty decent trade. I guess, yeah, average is something like that, 70, 80 cents per share. All right, so the reason I wanted to take this in the IRA is because I know that the recent reverse split stocks can move quickly and sometimes do give us the home run. And the way I had both of them lined up, my main account and my IRA, and just the look of it, the way it was already starting a little bit pre-market, it just to me looked kind of like that KBSF setup or that INNT setup. And so it was just a matter of seeing the volume. And then I also thought, well, look, I'm only taking 2,000 shares. So if it goes the wrong way, I'll stop out with a $400 loss. Maybe I'll lose 20 cents. I mean, maybe I could lose a little bit more than that, but I'll probably keep the loss pretty tight. So I'll just get in. If it breaks over 750, I think this could very quickly retest the highs up here, which is like 1250. That's what I was looking at on the daily, that we had room up to 1095 and then 1250. And it was on the gap scanner. So it wasn't like an arbitrary stock that no one was seeing. It was right on the scans. So that kind of made me feel a little bit more confident about it. And again, yeah, there was a little bit more risk on this, but mitigated by smaller size. And I can't take 10,000 shares at this price anyways right now, but I was trading a little bit more conservatively just because of the price and the size. So with my main account, I'm basically adding into the squeeze because I'm thinking we've had stocks like this, CHFS. Remember that one, CHFS, where I got into a stock, it was like $7, and it squeezed all the way up to $14, $15 through circuit breaker halts. That ended up being a $33,000 winner. I mean, it was massive. It was the biggest win last year, and it was on this recent type of reverse split setup. So that's kind of where I think I was like, the potential is that this could be a home run. The downside risk, maybe 50 cents at most. Back down to $7, the low of this candle. But with the volume that was coming in, the buyers that I saw, it kind of made me think that it was going to open up a little bit. So anyways, it starts to squeeze up a little bit. I jump in, I add 797, I add again at 850. I sold, started to sell, but again, see, even at 850, it was a partial fill, only 600 shares. I was having a hard time getting filled for whatever reason. It was just moving so quickly. I then sold some at $9. It dips down for a second, and then I thought, well, you know what? I'm going to add over 9. I add, but I only fill 100 shares. So actually, almost every single one of my orders, except for this one, were partial fills. And then I was able to sell full position at, the full size of that order at 934, and then selling more at 910, 899, and then stopping out the rest at 825. So as you can see, this didn't hold up very well because right here on this 1 minute micro pullback, it failed. And this is the same thing that we saw with CWLT. So you have to be aware of these 1 minute micro pullbacks that fail. Let's see, let's look at CLWT. Right, so the stock is consolidating, and then that's the moment of truth. We don't want to see it break below the low of that previous candle. So what we usually like to see is a little bit of consolidation in this type of range from 850? Between 850 and the high here of 947, consolidation, and then I would be adding over 950 for the first 1 minute pullback and a move back up. That's what I was looking for. I had my order for 1,500 shares ready to go, ready to add at 950. And I thought then it would break, hit 977, $10, 1050, up towards 1095 on the daily chart. So that was the moment of truth. And when that failed, I stopped out and it dropped quickly, which is exactly what happened with CLWT. So if you learn to anticipate those moves, you can get out sooner. So I sold at 825 pretty much as soon as it broke that level of 850, I sold and had 25 cents of slippage. Whatever, not that big of a deal. It dropped down to 714. So I'm glad that I stopped out as quickly as I did. For a beginner trader, this is, I mean, we talk about these in the class all the time. We show tons of examples of false breakouts because you have to be prepared for them. They will happen, and you want to make sure you're selling, you're the first one to the door, not the last one to the door. So that means you know if this breaks below 390, that's not good, right? That's the spot to get out of the way. So, you know, both of these stocks were kind of interesting today. CLWT, I missed a couple of opportunities on it, both long and short. Being 5-cent tick, I wasn't super confident on it, but did well on UAVS on the recent reverse split setup. So, you know, green is good, $6,378.64. And so let's see, that puts me up right now, I guess around 5,500 on the week. Because I had that red day on Monday. I was down 3,100 on Monday. Yesterday I made back 2,300. You know, so still red on, well, green on the week, but still red also because Friday I lost 11,000. So including the 11,000 on Friday, I'm still down about 5,500 from my all-time highs on the year. Having said that, I'm sitting right now at, let's see, about $42,000 of profit on the month, which is not bad. $42,000 for the month of March is good. We've got 1 day left. That's tomorrow. We'll finish up the month, have the day off on Friday, and we'll start April hopefully feeling good and continuing to carry this momentum. All right, so that's about it for me, and I hope you guys have a great afternoon. I'm going to head over and sit down with our Inner Circle students. We're going to have our mentor sessions this afternoon, and we'll be doing our thing. So anyways, I hope you guys have a great afternoon, and I'll see you first thing tomorrow morning. All right, see you guys in the morning.
Oh hey, I didn't see you there. Well, I was just working on the dream board for my next home run trade. Hopefully it comes soon. Until then, make sure you subscribe to get email alerts anytime I go live or upload new videos. Until then, happy surfing